What the accounting is about? What are you buying when you buy a stock? Why some companies' stock decrease when the company seems to have a great future? In this video, I will use three cups and two liquids to explain those ideas. Imagine that you want to run a business. Say you want to run a convenience store. And of course, the first thing you need is money. And you can have some money from yourself, or you can have some partner to help business with you together. So first, imagine that this is the money that you have by yourself or from your partner. And you put the money in your business. However, after you put the money in your business, you feel like you don't have enough, so you want to borrow some money from the bank. And suppose that this is money from the bank. So right now, this is the total money you have in your business for the future growth. The black part is the one contributed by yourself or your partner, and the yellow part is the part you borrow from the bank or from other bondholders. So in business or in account, we call it asset. This is the total asset or total money you have for the business at this moment. And as you open your convenience store and you have been have growth and you have generate revenue, make money, and right now your business the capital or asset in your company has increased because right now you make money. After you make money, the total money in your company increase. So this is total money in your business right now. However, the debt is still the same because you didn't borrow new money. So right now, if I want to know how much money you have, I just can make the money the money you have in your business, subtract the debt. So to make it easier, I will separate the debt in this cup. Now, this is the money you have right now. The debt is the same. The money you contribute the money contributed by you and your partner increase after your company make a profit. The debt is the same. If I use the total money you have in your business right now, subtract the money you borrow, and then the left is the money that will come you and your partner. And this is the most fundamental and basic formula in accounting and finance, which is the asset equal to debt or liability plus the equity. And as the stockholders, when you buy some stock, this is what money comes to you. You have a business. It can be any business. It can be Amazon, Nvidia. It can also be Costco and Walmart. This is a business. The business originally consists of the debt it borrowed and the equity contributed by shareholders. If in the future they have more growth, they make more money, the total company's worth value increase. If the debt stays the same, the money left to shareholders will increase, which means the stock will increase. Conversely, if the company lose money, lose money, the debt stays the same, and the equity will decrease. And there's other example that more complicated than that. So now suppose that the company wants to increase the production. Like for example, you are something like company and you said right now it's AI and I want to increase the business. So you want to borrow some debt to increase the business. So when you borrow the debt increase. To make the formula increase, you need to change either of them. when you borrow some debt, you also get some money for some debt for investment. So your assets also increase. However, you need to pay interest and principal in the future. If your business, like for example, if you borrow 10 billion dollars, if if the additional revenues and the income you generate less than the 100 billion, well, the debt is same. And if you pay some of the interest with the cash, you're actually left over the difference. And in fact, I have a example on hand, and I will show you just right now. About 2 years ago, I just valued the Taiwan Semiconductor, the largest semiconductor manufacturing company. Basically, what it's doing is manufacturing chips for those large big names like NVIDIA, AMD, Intel, Qualcomm. And I was thinking, if I know the top 10 customers for TSMC, and if I know how many revenues they can grow in the future, and for each dollar those customers generate, how much money they need to pay to Taiwan Semiconductor, and then I can estimate or forecast TSMC's future growth. So in this PowerPoint, you can find out how we have listed those customers. We have Apple, MediaTek. We also have NVIDIA, AMD, Qualcomm, Broadcom, Sony. Those are estimated revenues. Those are revenues that I estimate they will pay to TSMC 2 years ago. And if you check the Excel, you can find that for the Marvell, the revenue barely changed. Why is that? So first, let's take a look at the Marvell technology. This is information I calculated based on Marvell Technologies financial report for the past 10 years. This is a return on capital, which means how much money they generate, how much operating income they generate from their investment. You can see that the company starts with about 13 to 14% return on capital. Well, it's not very impressive, but it's not bad. So when I saw that, I was like, however, from 2016 to 2019, or even 20, the company's return on capital has been reduced or slumped severely. It's even turned to the negative. And I was thinking, why that happened? And to talk about that, I will show you another Excel about some detail. So in this Excel, I collect many information from Marvell Technology in the past 10 years. I know many things you probably don't know, but we can talk later. We have operating income, which means how much money they make. We also have the short-term interest-bearing debt, which means, the money they borrow, they need to pay interest. However, one thing that struck my eyes is interest expense. You see that the company starts with 500 or 700 million interest expense, which is quite normal for a company that, such large. However, from 2018 to 2020, you can see that the interest expense increased about 100 or even 200 times compared to 2016 and 17. And I was thinking, how did they pay that much interest expense? And I found that all those expenses are paid for the debt for the acquisition. The acquisition means that the company tries to acquire another company. And when it comes to the acquisition, I will show you another picture about the Marvell Technology. So this graph is about information for the reinvestment that the Marvell Technology has been made in the future. The green color means research and development. investment, which means, the company try to hire some IT engineering to invent or make some new or more advanced tools. And the blue color is the capital expenditure, which means, for the manufacturing or building or land. However, one thing that strikes my eye is the purple color, is acquisition. You can tell that from 2018 to 2021, almost all reinvestment back comes from company's acquisition. But the acquisition does not generate growth. Even worse, it makes the return on capital become negative. So I would say Marvell Technology is a company that starts with a mediocre company or average company. And it's not bad to be average, but the management want to do something new. But instead of focus on itself, you can reduce the cost, like General Electric spin off the business, or you can change your business model. For example, Microsoft changed from making hardware computer to software Microsoft 365 to the cloud computing. Or like Amazon, they started with to selling books and they become retailers and then they become cloud computing. And now they're also doing streaming and pharmacy. Instead of doing all those things, that this company want to take shortcut. They want to do the acquisition and they pay the price. And if you are curious, you can check the Marvell Technology stock performance over the year. When the company has some big acquisition, of course, investment bank and traders will try to sell the news. But after the tide goes away, who is swimming liquidly. So this is my first accounting class with steady language or language everyone can understand. In my next video, I will explain 3 financial statements, deal with words that everyone with no background information can understand. Thank you.